All right, everyone. Welcome to the weekly analysis video for this upcoming week, beginning February 2 and ending on February 7. So as usual, before we begin, let's just pray. God, thank you again for your blessings and for your goodness. Thank you again for this opportunity to trade. We ask that you'll be with us and be with anyone watching this video. May it be inspirational and instrumental in helping them to be a successful trader. We thank you for your blessing and we thank you for this insight that you have blessed me with. We just look forward to seeing you when you shall come. Thank you and we bless you in Jesus' name. Amen. All right, guys. So for this week, nothing has changed. You guys know my bias for the NASDAQ 100, which is the only thing that I have been trading now for the past, I want to say 4 years. Because I like it because it's very predictable. A lot of people say that the NASDAQ is very unpredictable, but I beg to differ. It's extremely predictable. Once you figure out the market, you actually are able to trade it with confidence. So that comes with practice, that comes with being consistent, and that comes with being patient. All right, so as you guys know, I'm currently on the 1 hour time frame. And the reason why I do the 1 hour time frame is because as a day trader, as a swing trader, it actually gives you very precise entries. Once you identify the trend that the market is currently in, it becomes easier to actually trade. All right, now those of you who are watching this video for the first time, I would encourage you to go back to watch some of my how-to videos where I teach you how to set up the charts. I teach you how to draw my support and resistance lines, and also how to draw my weekly boundaries and my daily boundaries. So you'll know that the blue lines here represents my weekly boundaries, Sunday, and then of course these green lines are Monday, Tuesday, Wednesday, Thursday, and of course ends with Friday. All right. So let's look. Last week, as you will, I've seen from my weekly review video, the market basically made its low on Monday, and since then has been making higher lows, higher highs on the 1 hour time frame. Okay, although it's trending upwards on the 1 hour time frame for this past week, please understand that it's still in a consolidation mode. Okay, now the consolidation mode is identified here when I go to my daily time frame. Okay, you'll notice that the market made its last low on October 31st, 2024. Then it went up and it made its last high on Monday, December 16. Okay, since then, okay, since December 16, price has consolidated between the last low and the last high. Okay, so it has done a whole bunch of consolidation moves over the past months within that zone. Okay, so price has been consolidating on the larger time frame, but don't forget that the market is in a bullish structure, which means it's making higher lows, higher highs. However, while it's making those higher lows, higher highs, you will find consolidation points on your lower time frames. You'll also find time frames that are actually in a bearish bias, because it's bearish because it needs to set up that higher low on the larger time frame. Okay, so as I've said before, I've always maintained any sells that the market makes is all only a temporary retracement to set up a larger higher low on your largest time frame. Okay, so what do we see here? So currently, if we start from our monthly, which is where you want to start, you will see that the price is currently at a higher high. Okay, now all of January, excuse me, January, the market still finished bullish. Okay. How do I know it finished bullish? Very obvious. The candle finished green. Okay. Despite the fact that it has a wick at the top and a wick at the bottom, still doesn't take away from the fact that it's a bullish candle. Okay. It's taking a while to get back to the all-time high. Doesn't matter. Sometimes the market does that. It will take its own time. But one thing is for sure, this all-time high that was made at 22,135.4 will get broken. There's no question about that. All right. So we go down to my weekly time frame. And on the weekly time frame, you see a lot more of the consolidation being played out. This was the all-time high that was made December 16, 2024. Since then, price has basically just consolidated. So you have a green, a red, then you have another red, then you have a green and another green, and now you have a red. I mean, pure consolidation. However, it's consolidating on the upper space. So which means the last higher low was here on your weekly time frame. Price has been consolidating here ever since. All right. Now, going down to the daily, you'll see what's happening here. This was your all-time high. Price came down, it made a higher low. Then it came up, it was supposed to make a higher high in order to continue that trend. However, you'll notice that the market made a lower high. What I've always said about higher lows to higher highs. If you're trading higher lows to higher highs and you got in on your higher low and the market only made a lower high at the top, it means it's still consolidating. Well, how do I know it's consolidating? This was the last high. This was the last low. All the activity is happening between this range. It's consolidating between the last established range. Okay. Also, to further confirm that point, it came up and instead of making a higher high, it only made a lower high. That's a consolidation point. Okay. So if I got in on my higher low and the price came here and made a lower high, guess what? I take my profit and I'm waiting again. That's it. All right. So that's the daily. Going down to the 4 hour, you see that played out a lot more. This was the higher high. Notice price consolidating. This was the last low that was shown on the, sorry, the last low was shown on, what is it? October, I want to say, yep, October, in October. All right. This is where we were. Okay. October 31st. All right. So price has been consolidating between this low and this all-time high. All right. See all of that consolidation. Right? All right. So what that means, what I've just pointed out, is that every single time frame that I've looked at so far is at a high point. Okay. Some sort of high. So it's only fair that you expect that the market is going to come down to make some sort of higher low. Okay. So if we go back on the 1 hour, and we look at Friday, okay, you see here, price finished at a higher low. Let's look at the 2 hour. Price also finished at a higher low. Okay. And then if you look at the 3 hour, price finished with nothing. Okay. What does that mean? Well, price can't buy from a high. So we need to see some sort of low before we start to buy again. So remember, any sales that the market does is going to be a temporary retracement in order to pick up the higher high. Now, you know, although I said the market isn't eternally bullish and I'm really only interested in my buys, guess what? There will always be sales in the market. The problem is 99.9% of you don't know when to sell. You're just expecting that the market is going to go into free fall, and that's not the case. So I always say to you, your best bet, since you always feel that you need to trade, your best bet is to take your higher lows and trade them up to your higher highs. And in the event that it does not make a higher high, you take your profit on your lower high, then you wait for another higher low. That's the easiest and the most guaranteed way to trade this market. Because 99.9% of you decide that, okay, fine, you see this big drop here on Monday. Okay, most of you are going to enter sells at this point in time. Okay, market sells to here. You're like, yes, it's going to continue going. No, this is the time when you need to take your profit and wait. Okay, guess what? It came here, did this, wicked out, and it just continued going ever since all of last week. It just kept buying. All right. So every single person who started off the week selling, okay, ended the week pretty much in the red. Okay, unless you caught the move right here when the market opened on Friday, you would have been in the red. You would be in the green because it went down. It did a nice little sell on Monday. But guess what? Since Monday, it has been going up ever since. Now, not to say that the market is not selling right now. Like I said, any sell that the market gives you, it's a temporary retracement to create that higher low. All right. So when you look at your 1 hour, you see it's at a higher low. You look at your 2 hour, it's at a higher low. Okay. Do I buy from here? Okay. At some point in time, we know this market is going to go up because it's starting to show signs that it is, in fact, going to make higher lows to go to higher highs. However, the key point here is that you still have bigger time frames. You have the 3 hour all the way up until the 23 hour that's coming from a lower high. So again, 3 types of highs: high, higher high, lower high. Okay, you cannot buy from any one of those highs. You have to wait until the market comes down to make that low point, whether it's a low, a lower low, or a higher low, and then you buy upwards. Okay, all right. So that's exactly what I'm talking about. So for this week, it's real simple. What am I waiting for again? I'm waiting for my largest higher low to continue buying to my higher highs. Am I in a buy right now? Absolutely not. I would not have taken a buy here on Friday. Why? Because at this point in time, the market right now is in a consolidatory point. There's your low, there's your high. Price is still within the consolidation range between these 2 points. All right. So I'm waiting. All right. No big rush. Another thing that you can actually do is never neglect to use your fib. So you take a fib and you draw from here. This is just a rough fib. It's not precise. We take a fib and you draw from here. Okay. Price is currently at the 78% on a 1 hour retracement. Okay. Is that enough for me to actually say, yes, the price is going to make higher lows, higher highs? Probably not. Because guess what? You can get a situation where the price actually comes and gives you more than 100% retracement, which means if you look at your bigger time frame, guess what? Nothing has come on your 3 hour time frame. Okay. And remember, you always want to give the nod to your largest time frame. Okay. So let's look at here. So many different scenarios, and that is why you have consolidation points. This is your 3 hour fib. Price came up. Notice it broke above the 78%. Okay. Guess what? It's fair game. Price can always retrace and come all the way back down to the 61%. Now, let's put a line right here and look at a number of scenarios. If we do this, let's say price came back here. All right, let me change this color. Let's say price came back here. Let's look at one of the bigger time frames. If price came back there, we are now looking, let's say, at the daily. Okay, price came back here. It would actually be at a low point. Okay, now, how would that relate? If you looked at the weekly time frame, guess what? A higher low right here would not be unreasonable. It's still going to be a higher low on your larger time frames. Remember, the trend is higher lows to higher highs. All right. So don't ever forget that. Just understand that if you're going to be buying, you have to be patient. If you're going to be selling, you better be a very good expert to be able to understand that this is a temporary retracement and the sell is not going to last forever. So that is one of the reasons why I don't recommend it. If you're new to trading and you don't understand what you're doing, do not try to sell a bullish market. All right. So going back to where we are, right? So price can actually come and break and go all the way down here to minus 61% retracement, which would be your profit taking zone on your 1 hour. Or if you're looking at your 3 hour, it's the same thing. Retrace to a 78, just above the 78%. Price can actually come all the way back down here to break. Look at a bigger time frame. Let's say the 4 hour. On your 4 hour, here we go. You have higher low, sorry, lower low to a high. That's a direct. Then you came, you had a very hard retracement to create this higher low. It came up, it only made a lower high right here. Okay, price can wick out right here and decide to continue going up. So there are many different scenarios. One thing you have to understand is that the trend is always your friend. Going up to a bigger time frame like the 23 hour, here we go, low to high, higher low, we can expect a higher high if the trend continues. However, since this is a consolidation point and you had one full day of bearish activity, okay, what are we going to see now for the new week, which begins tomorrow? Okay, so looking at last week, very similar situation happened last week. Price finished here at a high, okay, on Friday. You still had these two bullish candles right here, which represents Friday. So the first 23 hours would have started from 5 o'clock on Thursday. And then at 4 o'clock, this is the 4 to 5 o'clock candle, which is usually the smaller of the two candles on the 23 hour. Notice this is where the market finished on Sunday. Look at what happened. Big drop. Okay. This week, you have a similar scenario. Okay. One thing to note is that it finished at a high. It finished at a high, but it's also a lower high. Okay. So again, market can drop. Remember, price does not buy from high points. Does not buy from high points. So you will expect some amount of retracement to happen. Okay. My gut tells me that you're going to have a similar situation like you had last week, only because of where price finished. Okay. So I'm expecting to see some sort of continuation in the fall before we actually find that support and continue buying for the week. All right. So just to wrap this up, just so I don't drag it out too long. Again, price eternally bullish. Okay. Higher low to higher highs. That's what I'm expecting, which means I'm only waiting on my higher lows to take my buys to my higher highs. It's only a matter of time before your all-time highs are going to get broken. Now, one thing that I want to point out is I did not put in my profit levels on my chart. So I'm just going to do that right now. So I'll just copy all of these numbers here. So we have 5 points for 2025 profit levels. The first one is going to be here. Come over here, draw a line. Let's make this one. Use a purple color. And I'm just going to put that in. That's TP1, which is going to be right here. And then the second TP is going to be this one here. Copy that. Do another line. Make it precise. That's TP2. And then over here we have TP3. Okay. And then we have TP4. TP4. And then the last one is going to be TP5. P5 is right there. And then I'll just basically copy over all of these. So I copy, and then I paste, and then I copy, and then paste, copy, and then I paste. I'll just move over all of those because, like I mentioned to you, those TPE levels are going to be broken at some point in time. I mean, it's just a matter of being patient and waiting on the thing. So I just shift these over here. Let's put them right at levels. Just shift my labels over. Just do this because it makes it so much easier for me in the week when I'm doing my analysis. And guys, just so you know, I do my analysis every single week. Okay, I draw a new chart. I don't carry it over, because I like to see what the market is doing on a weekly basis. That way I'm able to spot trends, I'm able to make adjustments. Anything that needs to be done, it's easier done when I'm seeing the market on a weekly basis. Now, this fibs that I had here, of course, was just a fibs that I used to show you what I'm looking at different time points. My master fib, as you know, I've drawn on my daily consistently because I'm tracking the consolidation points and the retracement points. So here we go. I'm going to mark levels on my fib. So first level here is going to be 19,910.9. So it's 19,910.9. And then the next fib is going to be the all-time high, which is 22,135.4. 35.4. There we go. Yep, that's my fib. So going on my 1 hour, I'm able to see what level the price is at. So as you can see, currently we are, let's make this precise right here. Let's pull this up right here. Put this back. All right, so now my fib is precisely. So as you can see right now, it's trading above the 38% level. All right. As we know, price can either bounce on the 35% level and just shoot right back in the other direction, or it can break, close under it, shoot down. All right. That's why in consolidation markets, you always want to trade your trend. There's absolutely no reason for me to rush into this trade right now. I already know that the market is making higher lows. All right. It's doing it on a 1 hour, and you still have 22 hours worth of time frames that still has not registered. Well, actually, it would be 21. Okay. Because the 2 hour actually here, 2 hour also registered a higher low. So which means anything above the 3 hour has not registered a higher low as yet. So I'm expecting it to continue to find that support before continuing to buy again. All right. So hopefully this video was clear enough and it can actually help somebody with their trading and analysis for this week. Like I said, continue to practice, continue to journal, continue to do your reviews, continue to actually get better. And the only way you can get better is by keeping to practice to analyze, to make notes, to try different scenarios. And most of all, guys, do not use a live account until you are absolutely sure of what you are doing. Trust me, the money will come easily, but you must be patient and wait and learn the process before you actually start using your real hard-earned cash on the markets. All right. So with that being said, thank you again, guys, for watching. I know this video might be a little bit lengthy, but hopefully it served its purpose. Again, NASDAQ 100 is a historically bullish instrument, which means your safest and your guaranteed trades will be to take your largest higher low, trade it to your higher high. In the event that you get only a lower high, it means the market is still consolidating. So you take your profit on your lower high, then wait for another higher low, then you buy again. You keep doing that until the higher highs are broken and the market is back in trend. Trust me, you try that strategy and you learn it, you're consistent with it, I can tell you 100% of the time, you will never lose another single trade. Trust me when I tell you. It's just a matter of being patient and being consistent and just practicing. So, God, thank you again for your blessings and for your goodness. Pray for anyone watching this video or who has watched this video or who will watch this video in the future. May it be beneficial to them. May they also, improve on their strategy and learn to be consistent and patient. We thank you and we love you. In Jesus' name. All right, guys, take care. Have a wonderful trading week, and I'll see you next time. Bye.